It is 5 in the morning. Your alarm went off 45 minutes ago. The van is half loaded. You have been at this since last night. Harvesting, washing, sorting, pricing, packing. The produce is in the crates. The tent is in the back. The handmade signs are wrapped in a towel so they do not bend. You budgeted the $50 table fee. You did not budget the next 14 hours of your Saturday. Today we run the complete forensic audit on the farmer's market business model. Every cost, every hour, every number that does not appear on the market application form. And at the end, we answer the question that almost nobody in this space has ever answered honestly. Is a farmer's market stall actually worth it? And if so, for whom, under exactly what conditions, and what does the math say about everyone else? We don't grow crops, we grow margins. Let's get into it. Part 1. The hidden clock. Let us count Saturday, not the hours you spend at the stall, all of them. It starts Friday afternoon. If you are growing vegetables, the harvest begins 4 to 6 hours before market. Washing, sorting, bundling, weighing, pricing. If you are selling prepared food, you were in the kitchen the night before. Either way, Friday evening belongs to Saturday's market. Saturday morning, you are loading the vehicle in the dark. You drive to the market. Cornell Small Farms Program found that New York farmers average 17 miles each way to their market. You arrive early because setup opens at 6 and you want the best spot. Setup: tent, tables, tablecloths, display stands, signs, weights, crates of product. Cornell's data found this takes roughly an hour. Then you sell. Most farmers' markets run 3 to 4 hours of public selling time. Then you break down. Everything that went up comes back down. The unsold produce goes back in the crates. The tent comes down. The van gets reloaded. You drive home. Then you unload. Store the unsold product. Clean the crates. Wash the coolers if you had cold items. Cornell's New York survey found that farmers are away from their farm for approximately 7 hours per market day, and that is just travel, setup, selling, and breakdown, without counting the Friday harvest prep. Find Homegrown's 2026 vendor research, which counted every hour, including prep, found the all-in total is 10 to 17 hours per market day for solo vendors. 10 to 17 hours for one Saturday. Farmers attending 2.5 markets per week, the Cornell average, are committing 17 to 18 hours away from their farm every week just for market activities, before growing anything. Now here is the question that starts the audit. If a Saturday at the farmer's market takes 14 hours, what does the $50 table fee look like inside that full picture? Let us find out exactly what a farmer's market day actually costs. Every line item, with a source on every number. Part 2. The real cost of one market day. The Cornell Small Farms Program ran a complete budget for a direct marketing farmer in New York State. Let me walk you through their season. Gross sales for the full season, $65,585. That is 26 weeks of markets. On paper, it looks like a healthy farm business. Now let us open the expense side. The table fee. Cornell found that vendor fees average $23.20 per market day in New York, about 2.3% of daily sales. For the full season, $1,508. Labor at market. Someone has to be at the stall. Cornell found that market labor cost $8,060 for the season, $310 per week. That is the cost of the person selling, not the person growing. Transport. 17 miles each way, every week, for 26 weeks. Cornell's season budget shows $2,210 in travel expenses on that $65,585 of gross revenue. Packaging, bags, boxes, twist ties, labels, rubber bands. Find Homegrown's 2026 research found vendors spend $15 to $40 per market day on packaging alone. Cornell's New York average, $138 for the season. Insurance. Most markets require liability coverage. Cornell found the average across their surveyed farms was $149 per season for market-related insurance. Display. The tent, the tables, the weights, the signs. Stan Scout Oregon puts the startup cost at $500 to $1,000. That capital spreads across multiple seasons, but it came out of someone's bank account before they sold a single item. Card processing. Square charges 2.6% plus 15 cents per swipe on its free plan. On a $900 gross sales day, that is $23.68 in card fees. Not enormous, but it is there every single week. When Cornell added up all the marketing costs for that New York season, vendor fees, labor, transport, packaging, insurance, materials, the total came to $12,375 against $65,585 of gross revenue. The table fee was $1,508 of that $12,375 expense stack. The table fee is 12% of the total cost of running a farmer's market operation. Labor, transport, insurance, packaging, and card processing are the other 88%. They do not have a sign on them at the market. They do not appear on the application form. But they are there every week, whether it is a good Saturday or a slow one. And we have still not touched what is really eating your Saturday. Everything I have shown you is the cost of selling, the money that leaves your pocket to participate in the market. None of it explains something deeper. None of it explains why two vendors can set up side by side at the same market on the same Saturday, do the same hours, and end up in completely different financial positions. The reason for that gap comes next. And it is the number that changes how you think about every Saturday you have ever spent at a market. Part 3. The math nobody runs.
Here is the calculation that almost no farmer's market vendor ever does before their first season. Take your net earnings from a market day, after every cost we just named. Divide it by every hour you put into that day, not just the hours at the stall, all of them. The Friday harvest, the early Saturday load, the drive, the setup, the selling, the breakdown, the drive home, the unload and clean. That number, your real hourly rate for a market day, is the most important number in your farmer's market business, and most vendors have never calculated it. Colorado State University did. In their Market Channel Assessments research, a study of 25 farms selling through multiple channels, they calculated exactly this number for farmers market vendors. The median farmers market vendor earned $20.65 for every hour of market-related work across the season. The top quarter earned $48.41 per hour. The bottom quarter earned 60 cents. 60 cents. For every hour of the Friday harvest, the Saturday loading, the drive in the dark, the setup, the selling, the breakdown, the drive home. Not 60 cents per sale, 60 cents per hour. Now think about what creates that gap. The top quarter and the bottom quarter are often at the same market. Same tent format, same Saturday. What separates them is not luck, and it is not location. We will come to that in a moment, but first, the finding that reframes this entire conversation. The University of Minnesota Extension ran a financial analysis of 17 commercial vegetable farms. Farmers markets accounted for 51% of those farms' total revenue, more than CSA, more than wholesale, more than any other channel, and yet farmers markets delivered only 67 cents of profit for every dollar of sales, once all selling costs were accounted for. CSA delivered 86 cents. Wholesale delivered 92 cents. The channel that generates the most gross revenue for most small farms is also the least efficient channel per dollar of sales. The farms are most dependent on the channel that works hardest for them and pays them back the least. And almost none of them have ever run these numbers to see it. This is not a criticism of farmers market vendors. It is a description of what happens when gross revenue is mistaken for the whole story. The Saturday that generates $900 feels like a good Saturday, and it is in gross terms. But divided by 14 hours, minus every cost, it may be a very different story. So who is winning at this? And what single decision separates their Saturday from everyone else's?
Part 4. Two vendors, same market, completely different math.
Picture two vendors at the same farmer's market. Same arrival time, same setup, same 14 hours of Saturday. Vendor A sells tomatoes, 8 varieties, all beautiful, all heirloom. She prices them at $4 a pound. On a good Saturday, she grosses $400. On a slow Saturday, $180. Her tomatoes are perishable. Whatever does not sell today softens by Wednesday. She drives it home, and some of it goes to the compost. Vendor B sells tomato products, roasted tomato sauce in glass jars, sun-dried tomatoes in olive oil, tomato chutney. Her jars are priced at $12 to $16 each. Her ingredients came from the same field as vendor A's tomatoes. But her product does not soften by Wednesday. It sits on the shelf for months. She does not discount at the end of the market. She does not drive unsold inventory home to compost, and she can plan her production based on what she sold last week, not what the harvest gave her last night. Cornell's New York survey shows what this difference looks like in real numbers. Baked goods and value-added product vendors in the Cornell data averaged $1,467 per market day in gross sales. Vegetable vendors averaged $905, same market, same 14 hours, same tent. 62% more gross revenue from the same table space, the same drive, the same Saturday. Multiple extension programs, Oregon State University Small Farms, Penn State Extension, the Regenerative Farmers of America, all point to the same conclusion. Value-added products allow vendors to achieve gross profit margins of 50% or more. Raw commodity vegetables sold by weight rarely reach that. The second difference is labor at the stall. Cornell found that average sales per employee at a farmer's market were $370 per market day. Adding staff only makes financial sense when gross sales are high enough to justify the extra labor cost. The top quarter vendors are not running large crews. They are running tight ones. The third difference is how they think about the market's role. The Minnesota study shows that the farms doing well financially use farmers' markets for what markets do best: premium pricing, direct customer relationships, and product testing. Then, they use CSA for preseason cash flow. They use wholesale and restaurant accounts for volume and predictability. They do not bet the whole business on one Saturday. And there is a threshold that nobody mentions in the launch videos. Find Homegrown's 2026 vendor research found that vendors who net approximately $400 per market day after every selling cost earn $22 to $33 per hour for their time. Below $400 net per day, the hourly rate falls sharply. The University of Maryland Extension worked example shows a $300 gross sales day generating $112 after marketing costs. That is $8 an hour for 14 hours of a vendor's Saturday. The threshold is $400 net per market day. Most business plans do not model that number at all.
Part 5. The Farm Analyst Verdict.
Back to 5 in the morning. The van is loaded. The tent is in the back. The signs are wrapped in a towel. You have budgeted the $50 table fee. The table fee, it turns out, is 12% of what this Saturday is going to cost you. The 14 hours are not in the budget. The transport is not in the budget. The labor at the stall is not in the budget. The card processing fees and the packaging and the insurance are not in the budget. And the unsold produce that comes home in the crates that is not in the budget either. None of this was hidden. It was just never shown. The Farm Analyst verdict on farmers market selling, it works, conditionally, with the right product, value-added, high-margin, non-perishable, with net sales consistently above $400 per market day, with tight labor that justifies the time investment, and with the market as one channel in a deliberate mix, not the whole strategy. The 32% of vendors who change markets or quit every year, USDA's 2020 National Farmers Market Manager Survey, did not fail because they could not grow food. They failed because nobody sat down with them before their first Saturday and ran this math. The 14 hours were always there. The 88% of costs that are not the table fee were always there. The 60 cents per hour that the bottom quarter of vendors earns was always in the data. We are not here to tell you that farmers markets are worth it or not worth it. We are here to make sure that when you load that van at 5 in the morning, you already know the full picture. Subscribe to the Farm Analyst. Every audit on this channel is built the same way. Sourced data, complete cost accounting. The honest math behind every number that gets used to sell people on a business model before they understand it. Next, the lavender farm. The $80,000 per acre claim, the 5-year establishment cost, and the distillation economics that almost nobody models before they plant the first seedling. We don't grow crops, we grow margins.